Hello everyone, this is Weiman, and we are back for another Beginner Forex Series topic. So today we are looking at topic 8, and topic 8 is about market structures. Okay, market structures. Now from here beyond, we are getting to the real stuff, that makes you a trader, makes you be able to execute trades. The things that we covered earlier just introduce you to forex trading. Okay, from here on, the actions you take, the decisions you make, the things you learned previously will help guide you. So we are looking at market structures. And what is market structure? Yeah, what is this thing called market structure? So market structure shows the flow of price on charts. What you see, it's like, how is the market behaving? Where is the market going? Okay, it's based on highs and lows that the prices form, and it's used to determine market direction, reversals, and trade setups. So when you learn market structures, you're laying your foundation of starting to actually forex trade. Okay, so foundation of a trend-based technical analysis. So when we are done with market structures, we are going to do trend line trading. And when you learn trend line trading, trust me, it's actually a trading strategy. You will start to trade by yourself. So we have three types of market structures. We have the uptrend, which we're looking at now, downtrend, and the sideways or the ranging market. So for the uptrend, which is the bullish market, price forms higher highs and higher lows. So as you can see from this image down here, you see from left to right, the price is generally moving upwards. Even if it goes up, it comes down, it goes up, it comes down, it goes up, comes down, and goes up more and then comes down. So this is the price creating higher highs, lower high. A lower high, like a higher low, sorry. A higher low means the next low is higher than the previous low. Higher high means the next high is higher than the previous high. So this is an uptrend. Okay, so if you're to take trades on this, when the price expands, you wait for a pullback for the price to come down, and then you take your trade from down. You target this high. This is your take profit. The trade expands, you wait for another pullback like that. Okay, so now if you're looking for a change of trend, you watch for break of previous higher low. If like this is our previous higher low, or any of this, if it breaks, now let's take a good example is here. We made this higher high, made this higher low, made that higher high, and then we broke this higher low. That is a signal that the reversal is coming, and as you can see, the trend weakened from up here and entered a downtrend. Okay, the next one is the downtrend. Here price forms lower lows and lower highs. You see from left to right, the market is generally moving downwards. Okay, and with this, you're looking for sales. You're looking for sell trades. In a downtrend, you look for sell trades. In an uptrend, you look for buy trades, because the price buys more, the market buys more than it sells. Now in a downtrend, the market sells more than it buys. Okay, so, and then also the same story here. Break over previous lower high can indicate a reversal. In case this lower high, remember this high is lower than this one, so it's a lower high. If it's broken, it could indicate a reversal, right? The next one is a ranging market, the sideways market. Here generally price moves between a resistance and a support. It just keeps consolidating in that same range. Now like you see this area marked in a box, you see the price entered here, went up, came down, again went up and came down, like in that range. There are no clear higher highs or lower lows. They just They buy near support and sell near resistance. Okay, this is a ranging market. It just keeps dancing in there. Most times they'll advise you not to trade these ranges. Actually, for beginners, never trade them. But for an experienced person, these are easy trades. The moment you know the market has entered into a range, you can actually easily capitalize on the support and resistances and make some money. But for a beginner, I strongly advise against it. Leave the ranging market alone, because you never know when it's going to break out of the range. Like you see here, like it broke out of the range, and sometimes this breakout can even be a false breakout and it comes back in the range, so it's risky. So those are the three types of market structures: the uptrend, downtrend, and ranging market, right? So how do you identify market structures in real time? Now, for these structures, you need to be on higher time frames. Don't be on M1, M15, M30 and say you're looking for the structures. You should be on higher time frame. Actually, H1, H4 daily, weekly, it should be a bigger time frame so that you have a wider field of view where the bigger time frames are heading. Remember, these small time frames just align with the bigger time frames. Yeah, so you can even see without marking the higher high and higher lows. You can just see that, okay, generally this thing is moving upwards. You'll be able to tell. So use structure boxes or trend lines to confirm your direction before entering trades. So why does market structure matters? It avoids trading against the trend. Remember, the trend is always your friend. Yeah. Also, it filters out bad setups. It helps you plan better entries and exits, because I'll tell you, if your setup is around a trend line, you have a double confluence that the trade could actually go your direction. Helps you plan better entries and exits, and then combines with support and resistance, price action, and indicators. Then the summary table is that for uptrend, you make higher highs and higher lows. So bullish, you buy on pullbacks. You buy when the price has come back, then you buy. Then downtrend, you have lower highs and lower lows. Bearish move, you just sell. Okay, sell the rallies. If the price has gone down and it has come back up, enter your sells to go back down. Ranging market, you have support and resistance, so this is neutral. Buy at support, sell at resistance. Resistance is the upper part, support is the lower part. Yeah, so that's it. The trend is your friend. Always trade with a friend, and like and subscribe, share the channel. See you on the next one.